Welcome to our daily Forex range bar chart market analysis. My name is Derek Schimming. This review is for Wednesday, March 27th. Now, starting with my currency strength chart, and I've already marked the London Open. The horizontal line is indicating 0 on the chart, and the vertical line is showing you the London Open. And you can see that since the London time frame, that the yen has been, even slightly before, you can see where the yen was starting to gain some momentum and a little bit of strength, and then once the London markets open, we see that the yen was the most positive single moving currency in the marketplace. The dollar also correlated with the yen to some degree, a little bit more consistent. It didn't start on the downside, but the dollar was also moving to the upside. It's very good when these two move together. It makes it ideal for us as traders, and we can see this on this chart. Now, both of them have obviously leveled off. We do have a holiday on Friday, banking holiday on Monday. Markets, I think we should anticipate, will be very slow tomorrow, going into a long 4-day weekend and the Easter holiday. And it's understandable based on time of day alone to see these currencies start to slow down. But we have the dollar and the yen to the upside. This is allowing a little bit of a retrace to what's happening. I think they're setting up to go lower again. It's almost unfortunate that we're going into a holiday based on what's setting up, but the moves will still happen, I'm sure. To the downside, look at everything moving to the downside. Other than the CAD, which is in yellow, you have the pound in pink, the Aussie here in orange, the Swiss is in white, New Zealand's in gray, and then of course the euro. The most negative trending single currency was the euro to the downside. You can see the Swiss was very consistent moving down. I think the Aussie was. The pound was a sharp move down, but it also leveled off the earliest and actually has made the biggest retrace. And you'll be able to see that in the likes of like the pound yen if you look at that chart, and we'll take a look at that here. That is, there is some very nice divergence here. We talked about the lack of separation on yesterday's CCYX view. Compare yesterday's chart view to the chart view today. Just look at that video briefly if you haven't already, and you'll see a drastic difference in picture where this is what I'm speaking of, more rake-like. We have the dollar and the yen consistently moving up on the day, even though the yen started from a negative level. It's definitely moving to the upside, and we have all the other currencies moving to the downside very consistently, barring the CAD, and the CAD's the one moving sideways. Now we see most of the currencies moving sideways, but again, we're deep into the New York time frame, and the markets slow down this time of day anyway, let alone the fact we're approaching the holiday weekend. Now, if we look at the individual currencies themselves, currency pairs themselves, euro dollar and euro yen on the left, pound dollar and pound yen on the right. Looking at the pound yen briefly, we talked about the stronger retrace. We can see it bottomed out quicker, shows a little double bottom here at S2. Pair went higher from that level. If you blow this up a little bit, you'll also see it found resistance at S1, and that was the move down in the pound yen earlier in the day. We've made trades both long and short in the yen pairs today, and they have in fact been productive. What we were looking for yesterday in the euro yen has taken place, and it's actually nice to see. Looking at yesterday's video, pointed out to you, staying under the pivot all day, very tight consolidative range, not much trading range in the pairs at all yesterday, let alone the euro yen. That's indicative of why the pivot points are so close together today, but we stayed below the pivot all day. After rollover, the pair did make a move to the upside, tried to go and test that 122 level, which I indicated, in my opinion, was critical to stay below 121.87 based on our spreads. And since that time frame, during the London marketplace, this pair in fact traded much lower. If you weren't in it quick, if you were apprehensive, you probably didn't have the ability to take the trade, or probably were a little leery of taking the trade and chasing into it, not knowing that it would continue to trade down the way it has on the day. But we can see the bobble at the pivot, I think, would have been the best opportunity early on. This was right after the market started. We started moving down in London. We saw how the yen was moving up on the CCYX, but you did, an hour in, get this bounce that gave an opportunity somewhere above 121, about 121.20. 27 is the pivot, so somewhere below that level, even if you were just looking for to trade down to the figure and beyond there. But again, these are one of these quicker moves, a little bit hard, and definitely get a little nervous about getting into the trade in these rungs down here. You don't know that's going to keep going. I completely understand that. In early, make a lot of pips. In late, and feel like you're chasing something and potentially lose money. You'd be very gun shy to be in the trade. But the move happened, and regardless, we should be excited about how it's set up, because now it's come down to test this 120 mark again. So we've done a double on the day, coming down, approaching 120. The lowest move was the last one made. We did see the retrace in the yen on the CCYX, even in the euro. It's given this thing a chance to retrace up a little bit, but it's just come into the zone. It's actually very attractively poised. Upside potential is still there in the pair. You can build a case for the long trade. You could say this is consolidating above the lows, and the upside potential is great. Trading to the figure, over the figure, that 120, 160, even 122. So you have the figure, the pivot, two serious support levels. It could trade all the way to 122 and still be attractive for our objective short. So there's definitely some potential both sides. And again, indicative of why long and short trades have worked today, I'll still have a bias and a preference to see this pair trade down. Because remember, how would your perception change? Let me look at it one other way. How would your perception change if it in fact did take out the 120 level? You know, we've hit that twice, and it's proven to be support, and I know your opinion would change of the pair, even if you were looking at it as a long trade in here. And obviously there's long buyers out there buying the pair, keeping those of us who are shorting it for really realizing the potential that I think exists. But that's the beauty of trading. Both of us can have our opinion and work. In this case, the buyers are in fact keeping the pair from moving lower. And we've discussed this. It appears on each pullback that since there was so much interest in trading this pair long for so many months, the major pullbacks all get met with some type of support. There's some type of buying that comes in and says, hey, this is cheap. But if we look at Monday's low after trading down dramatically, this came down to that 120 range, 120.07, and we look at the double today on today's low, we definitely can see, let's get to a little bit tighter study, we can definitely see why breaking that 120, at least on the short term, makes a lot of sense and would be attractive and would convert some of those who are trading long. It would convert some opinions if we took out these two significant low points on the week, at least in my opinion. I will be poised to take advantage of short trades when they break those levels. You can see the similar type pattern in the euro dollar. The Swiss yen was also a very tradable pair today. You look at the euro dollar here, it's done something very similar. It had that consolidation yesterday. It's moved lower, retraced it a little bit, losing momentum. It's coming into the zone. I still would contend the short trade is most important or most ideal. We have to look at the long trade on everything we do, and but the short setup is there. And all we need to see continued dollar and yen strength going into the holiday and into next week, which would be most ideal, and some euro and some pound weakness to really allow these trades to take place. The Swiss is going to follow the euro to the downside, so your Swiss yen is always going to make a good trade when the yen pairs are in play to the downside. So if you want to know more, if you have any questions, post them on the videos. I'll answer them in future during future sessions and recordings. Of course, send in your questions. If you have want additional information, you want to get involved in the free guest weeks that are coming up, send an email to info@fxrbc.com. That's info@fxrbc.com. I'm Derek Schimming with ForexRangeBarCharts.com. As always, you guys have a great day trading, and I look forward to seeing you on the floor.